Attribute sampling methods are used to test internal controls. Variable sampling methods are used to test the account balances, or in other words, variable sampling is used for substantive tests of details. Recall the two sampling risks for variable sampling. 1. The risk of incorrect acceptance, and 2. The risk of incorrect rejection. Which risk is worse, the risk of incorrect acceptance or the risk of incorrect rejection? That's right, the risk of incorrect acceptance is the one the auditor does not want to commit. Here, based upon the results of the sample, the auditor concludes that the account balance is fairly stated in all material respects, when in fact it is not. When a CPA accepts an incorrect balance, the audit is ineffective. If the CPA attempts to reject a correct balance, the auditor will be inefficient because they will spend time discussing the issue with the client only to find out that they, the auditor, are making a mistake. The risk of incorrect rejection leads to a very inefficient audit. There are two basic types of variable sampling. 1. Probability proportional to size, PPS sampling, and 2. Classical variable sampling. A common essay or other objective question requires candidates to compare PPS sampling with classical variable sampling. Please take the time to learn the following important comparison. PPS sampling is easier than classical variable sampling. The auditor must estimate the standard deviation for classical variable sampling. PPS sampling does not require the CPA to make an estimate of the standard deviation. PPS sampling can be designed quicker and easier, and the actual sampling plan can be performed before the total amount of the population is known. Auditors cannot begin classical variable sampling until they know the total account balance. PPS sampling automatically stratifies the sample, giving the CPA a smaller sample size. PPS is easy, but it cannot be utilized in all situations. PPS sampling does not effectively sample account balances that contain errors, unapplied credits, differences, or negative account balances. When you expect errors or negative balances, use classical variable for a smaller sample size and better results. Please rewind the CD and listen to the list again and again until you can remember all of the differences. The first order of business in variable sampling is to determine the sample size. Yes, you guessed it. The successful CPA candidate must know the factors that affect sample size and how the sample size will change when the factors are adjusted. Let's use what we learned in attribute sampling to help us learn the factors to consider for determining sample size in variable sampling. In attribute sampling, we considered 3 factors to establish the sample size. 1. The allowable risk of assessing control risk too low. 2. The tolerable deviation rate. And 3. The expected population deviation rate. Now, let's change the terms to apply to variable sampling. Instead of considering the risk of assessing control risk too low, we would consider the risk of incorrect acceptance and incorrect rejection. Instead of considering the tolerable deviation rate, we would consider the amount of tolerable misstatement or error. Finally, instead of considering the expected population deviation rate, we must estimate and consider the expected amount of misstatement. Do you see an important difference here? In attribute sampling for tests of controls, the factors described deviations. In variable sampling for substantive test of details, the factors center on misstatements rather than deviations. This makes sense because variable sampling deals with testing dollar account balances. Variable sampling deals with dollar misstatements rather than deviations. Do you remember what I told you about the population size for attribute sampling? The population size has little or no effect on sample size for attribute sampling. Now stay awake here. While the population size has little or no effect on sample size for attribute sampling, the population size does affect the sample size for variable sampling. The larger the dollar amount of the population, the greater the sample size. Another factor to consider when determining the sample size for variable sampling is the population variation. The more variable the population, the more the auditor must sample. Hence, for an accounts receivable balance containing many different sizes of customer accounts, the auditor will be sampling more than if each and every customer owed the same amount. The more variation in the population, the more the auditor must sample. Where are we now? We have identified 5 factors that the auditor must consider when determining sample size for variable sampling. 1. The population size. 2. The variation of the population. 3. The acceptable level of risk of incorrect rejection and incorrect acceptance. 4. The tolerable misstatement or error. And 5. The expected amount of misstatement. What effect do each of these factors have on sample size? The size of the population variation, and the expected amount of misstatement all have a direct effect on sample size. The greater the size of the population, the more variable the balances within the population, and the more errors or misstatements that the auditor expects will all lead to an increased sample size. If the population is small, the variation is slight, and the auditor expects few misstatements, then the sample size will be small. Now, for the acceptable risk level and the tolerable misstatement. Just like in attribute sampling, the greater the risk and the more misstatements that an auditor can tolerate, the less the auditor has to sample. There is an inverse relationship between the tolerable misstatement and sample size, and there is an inverse relationship between the acceptable risk levels and the sample size. Let's review all 5 factors to determine sample size for variable sampling. Say the factors with me as follows. There are 5 factors used to determine sample size for a variable sampling method. 1. Population variation. 2. Population size. 3. Expected amount of misstatement. 4. Risk of incorrect acceptance and rejection. And 5. The tolerable misstatement or error. The first 3, population variation, population size, and the expected amount of misstatement, all have a direct effect on sample size. The risk of incorrect acceptance or rejection and the tolerable misstatement have an inverse effect on sample size. It is very important to know the factors and the effect that a change in the factors would have on sample size. Try to use reasoning to remember the effect on sample size. If the population or account balance is large, then the auditor should increase the sample size. If there's a great deal of variation within the account balance, then the auditor should increase the sample size to deal with the wide variation of account balances. In fact, in the case of a great deal of variation within an account balance, auditors sometimes elect to stratify the population. Stratification involves sorting a group of items into various homogeneous groups. For example, take a population of various people, all ages, sizes, and nationalities. Before I sample, I might sort the people into 3 age groups. By breaking the overall population into 3 similar age groups, I could sample a few from each group and make appropriate conclusions, therefore reducing the sample size. Remember, when a population is stratified, the sample size is reduced.